Welcome to Hull on Estate and Succession Planning, a series of podcasts hosted by Ian Hull and Suzana Montag. The podcast you are listening to will provide information and insights into estate planning in Canada. From the offices of Hull & Hull in Toronto, here are Ian and Suzana.
Hi, and welcome to Hull on Estate and Succession Planning. You're listening to episode 171 of our podcast on Tuesday, July 7th, 2009.
Hi, Suzana.
Hi there, Ian. How are you today?
Great, thanks.
That's good. I'm fine, too.
I never asked you.
I know that, and that's why I thought I would just interject.
Isn't that funny? I never do. Well, that's a whole other therapy session for poor Suzana to go through. She jabbed me on it 170 podcasts later, but yeah. Okay, good. So tell me about yourself. Things good, you know?
Things are really good.
Yeah,
thank you.
No, but honestly, you're being dishonest with the viewers. You want to hear some honest.
I'm nothing but honest. And you know that better than anyone.
Oh, okay. Well, now that you totally knocked me off my topic area, shameless self-promotion. We're talking about planning ahead and transferring the family cottage, and our summer series, so to speak. There was a great tradition that Peter Zoski used to bring to the radio, and during the summer he would have, when he was off, he'd have great guests who would come on and talk about wonderful summer reading. And so this is about wonderful summer reading. And you can get copies of this by contacting Suzana directly, or it's on our webpage. There's a link to their webpage, and the whole brochure is there. So that we don't get any money on that, so we can't shamelessly self-promote that anymore. But let's come back to how you're really feeling.
I'm just great. So I understand you were up at your family cottage just recently.
I was, and we have talked to my daughter, and she's decided that she'd like to own the cottage.
No doubt about that.
And so it raises some issues because she's only 10.
And she does have two brothers.
Well, we've already cut them out of the will, so it's easy to cut them out of nothing. But so what we're going to talk about is the other option. First in our series, we talked about managing the family dynamic by managing the tax issue, in large part, as being a big cornerstone of the managing the family dynamic as well. Second one, we talked about some of the simplified solutions. This one, I think we need to spend some time on some of the more complex solutions, because it's in life, and especially when you have an emotional cottage, but unlike mine, a very expensive cottage, you do have to, with our clients, consider and concentrate on some of the more sophisticated ways of dealing with this wealth transfer, because it brings with it its own difficulties and so forth if you get oversimplistic. Mm-hmm. We talked about sell, we talked about gifting. This time let's talk about the inter vivos trust, using the concept of, in a sense, totally gifting the cottage by putting it into a trust, either at the outset or when you during the course of your children getting older, putting it in trust for the children. So we call that an inter vivos, or a lifetime trust.
Right. And that, of course, in contradistinction to a trust that you would create perhaps in your will. And so we're still talking about, while you're alive, what you can do so that you can, when we've talked about crystallizing the two main issues, the tax liability and the ultimate beneficiary of the cottage property.
So just to make the comment again on the tax liability, to set up the inter vivos trust, if you did it after, say, you own the cottage for 10 years, you're going to attract the deemed disposition. You're going to have to pay capital gains. You're going to be accelerating the capital gains. So there's a pro and con to that move. But the pro is putting it into a trust environment. Mm-hmm. And that again has its own pros and cons. But what are some of why would we be interested in doing this for our clients and exposing them to this extra layer of what is essentially bureaucracy at some level?
Well, the advantage, Ian, of course, is the fact that you can still control the property without giving it away absolutely if you continue to be a beneficiary of that trust arrangement. So it gives you a little bit of the flexibility in terms of divesting yourself of it and yet still having the right to use it if that's something that you'd like to do.
So, and the final sort of part of that is, of course, you're effectively transferring your wealth. And so you're dealing with the tax issue up front. you're adding on, and what sometimes, as you say, if you're a beneficiary, but if you're not a beneficiary, you're literally giving up the asset itself. One of the other sort of sub-controls is, and we can talk about it in some detail, is that, you know, setting up some sort of side agreements in terms of usage and so on, and that kind of stuff. But we'll come back to that in a second. What I like about the idea of the trust that can be useful tool is that you have got a designated plan. Like we talked about with gifting and selling, we have faced the music. We have faced the music while we are alive, and we have identified our plan with our wealth to our children.
That's right.
And so often, estate planning is about, well, we'll wait and see, we'll keep lots of flexibility and so on, when it's a bit of a misnomer. I mean, the truth is, most estate plans fall in within the same sort of 90% category in any event. Notwithstanding the fact we want lots of flexibility and we want to give lots of thought to things that could happen in the future and new marriages and so on. The truth is, it's a pretty good educated guess that you're going to want to pass your family cottage on to your children. So, if you want to face that music, and if the trust arrangement makes sense, why not face the music?
And the great thing about a trust arrangement, and that is a little bit different than the outright sale or the outright gift, is that it does have an inherent flexibility to it, in the sense that you are going to have some professional who's going to draw up the trust arrangement and can account for all these things that you'd like to have in terms of control, in terms of possibly access, or what have you. So it's a really good way, and you have a document at the end of the process. You've got a contract, so to speak, which hopefully will have some moral suasion to it with your family members as well.
Yes. I agree with you 100%. Okay, so notwithstanding the fact that most estate planning tends to, in my view, overemphasize the tax element. And we talk tax, but we know that tax, if it drives an estate plan, it's almost a devastating effect on the family in the sense that we haven't considered the other factors. But let's presume for the moment where we have a scenario where we have a client who the tax is not an issue. For all of the good reasons we've talked about. Maybe facing the music, maybe we've got the funding, maybe we've covered it off with life insurance, whatever, okay? So that is off the table as being a concern in terms of the estate plan. What are some of the other transfers on death techniques we can use? We've talked about lifetime, now let's talk about death, and let's do that in the context of we've solved the tax problem. And typically, and let's make it simple, you've solved it because you bought an insurance policy or you have enough cash to fund the tax.
That's right.
Okay? So what are some of the options on death?
I think one of the first ones that comes to my mind anyways is to have the property in joint tenancy.
Okay.
And so during lifetime, you've added another person on title to the property so that when you pass away, that property will pass by right of survivorship outright to that individual or those individuals.
Terrific. So, and that joint tenancy brings with it lots of flexibility because it is what we call under the radar screen transfers.
That's right.
Third parties don't need to get involved. The banks, you register a piece of paper on title, but it's essentially you're not restricted from dealing with that property by third parties. You don't need probate necessarily, and we don't want to make overarching rules because each case is separate. But it is the best way of avoiding a probate tax, and it is the best way of avoiding administrative, bureaucratic, menacing steps having been taken on death. It is the worst way to give up control.
Yes.
Right? And you are giving up tremendous control because one of the fundamental elements of creating a joint tenancy is what? The right of the joint tenant to say, I am severing the joint tenancy.
That's right.
So what am I getting at there?
Well, the idea is that when you are a joint tenant, either party, either one of the tenants can on their own surreptitiously or otherwise sever that tenancy so that when that person dies, it will not automatically pass by right of survivorship the whole property, but they will only be entitled to deal with their half. And that's something that brings a surprise to many, many clients. And so that's, I think, what you're getting at.
Absolutely. And I think why we wanted to start with the joint tenancy, and we're going to finish off with that gifting on death step, is it is the hybrid. It is both a step that you have to undertake during lifetime, which you want to take effect on death.
Right.
But there's this little window of time between when you create the joint tenancy and when you die that things can happen.
Yes.
And there's a tax element when you create the joint tenancy. So we'll recap that in our next podcast and then talk about some more steps on death and some of the impacts it has on the transfer of the cottage property. So thanks very much, Suzana. Again, glad to hear you're well.
Thank you very much, Ian.
You have been listening to Hull on Estate and Succession Planning by Ian Hall and Suzana Popovic-Montag. The podcast you've been listening to has been provided as an information service. It is a summary of current issues in estates and estate planning. It is not legal advice, and you are reminded to always speak with a legal professional regarding your specific circumstance. To listen to other Hull and Hall podcasts or leave any questions or comments, please visit our website at hullestatemediation.com.